This meeting is being recorded.
Awesome. Thank you, Dexter.
All righty. Good evening. Thank you, members, participants, and guests for joining our call and also our Facebook Live. Welcome back to this LA South Chamber Financial Literacy webinar. You have signed up for this evening webinar, the credit report and scores. Thank you for joining the session. Again, reminding this session is being recorded, so please take your notes. Use your chat box for any questions, and we'll be taking questions at the end of the presentation. And and please identify yourself in the chat box, your name and your business. And nice meeting all again. Thank you very much. And also we have Carolina Gomez. She's here. So let me just introduce myself. My name is Vernell Taylor, and I am the Union Bank Regional Manager for the student-run branches. We have branches in high schools, and we also established our new branch in Oakland, our community college and student-run branch. So we're all about supporting the community, giving back to our students, developing our students, teaching them financial education. That's our main focus. And having them understand about finances and the banking system and building relationships in the community. So tonight, we'll be covering again credit report and credit scores. And I'd like to introduce you to Caroline Gomez. She is the branch manager at the Crenshaw High School branch, and she will be our presenter this evening. Thank you very much for your patience, and we're looking forward for all the questions throughout the webinar. All righty, take it over, Carolina. She's going to share her screen.
Thank you, Vernell, and good evening, everyone. Just like Vernell mentioned, my name is Carolina Gomez, and I'm the branch manager and community outreach specialist for the Crenshaw High School branch, and very happy to be here again today presenting our module number 4, which is credit reports and credit scores. I'm sharing the screen now. I just want to confirm that everybody can see it. Yes? Awesome.
No, not yet.
Not yet? Okay, let me try to stop sharing and reshare again. And I want to apologize for not having my camera on. I'm just going to leave it off. I've been having some connection issues, and by having the camera off, it'll give me a little bit more bandwidth. So thank you for understanding. Okay, I'm sharing again.
Alrighty.
It's all there? Perfect. Okay. So let's go ahead and get started. Again, we're going to go over credit reports and credit scores on module number 4. So this is covering pretty much why is it important to know about credit, right? Credit could be very crucial when it comes to learning about big purchases. For example, when I got introduced to credit was when I bought my first car. This was way back when I was 23 or something like that. I was very fresh and new to even financial at that time. So I had no idea how to obtain credit, or how to even establish it before buying something big like a brand new car. So it was a shocker. If we can put ourselves on mute, that'll be great while we do the presentation. I really can't see the participants here, but okay, thank you so much. So we're gonna go over to our first slide. Give me a second. Okay, so how do we build credit from scratch? So there's different ways to build credit from scratch. You would ask your bank, see if they offer a secured credit card or unsecured credit card. Those are the easiest way to establish. We have building credit with parents. build credit without a credit card, meaning if you go to, for example, Best Buy or a furniture store and you buy a whole bunch of furniture and you take it out in credit and then make your small payments, that's a way to build credit without having a credit card. And then you can build your credit responsibly in that manner. So let me go to this next slide, which gives you a little bit more visual as far as to what we just discussed. So the first one is credit cards. Again, secure credit card, there's student credit cards and store credit cards. So the secure credit card, the way it works is you would make a deposit into a blocked account. So when you go to the financial institution, they will explain to you how this works. So it's just the bulk of money. It's your deposit. So minimum, from what I've seen in different banks, is usually about $300. But you could, again, search it up and see if you could do a little bit more. You decide how much you're going to put. But minimum to start, no more than $300, right? So you can start with using that money, right? Using the secured credit card and paying, I like to say paying yourself, because you're using your own pocket of money. That's your own credit that you're building. So you use it for everyday spending and then you pay yourself back. And that's building credit. And throughout time, it starts getting your history, your payment history, what type of purchases you make. So everything stays there and is slowly but surely building up that score. Help from parents. The way you can do that, if you're a young adult and you're looking to establish credit, you can ask your parent to add you to their credit card that they already have established. This helps you start building the credit as well. They already have the credit line and limit, but they add you as an authorized signer and give you limits so that you can start using it as well. So it's like or ask them for a co-sign. So for example, when I went to get my first car, they said to me, you have no credit. There's no credit history whatsoever. You need a co-signer. So in this case, it will be my parent, right? I can ask my parent, can he be my co-signer? Then they run his credit and see if there's some credit history there, so that they can, based off the credit that the parent has, would lend you either the purchase of a new car or a credit card. And then the balances also depend on how much is the credit. Credit without a credit card, we have here student loans, auto loans, mortgages, rent, cell phone payments, personal loans, and secured loans. So those are other types of credit without a credit card. How to build credit responsibly. So the way that we recommend is for you not to spend more than 30% of the credit limit. So right here we have an example of $1,000 credit limit, and try not to spend more than 300. That doesn't mean that you can't go over the 300, right? Because sometimes you might have a purchase that's more than $300 and you have the $1,000 limit. You can do that, but let's try to not miss those payments and try to pay it as much as you can. Pay it down as much as you can, and the sooner you can, right? So like that, your credit that you have pending, or the balances that you have in there, is not more than 30%. We're gonna go move over to what is debt. So debt is not the same as credit. So if you see the image there, debt is money that you owe to a person or a business, whereas credit is the ability to borrow the money. So you use credit to borrow money, which then becomes your debt. So here we want to think about, how much money do I owe? Do I owe somebody? Do I owe a business? Did I get grab a loan from this place? You just gotta know, ask yourself, how much do you have in debt, right? And know that if you borrowed money, that's your ability. That's the, based on your credit score, that's how much you were able to borrow. Okay, I'm gonna move forward to the next slide. So why do people get in debt? So there's many reasons why. So to purchase assets, like I mentioned, a new car, maybe to buy new furniture, new computer. When you want to maybe purchase a condo or a new home, right? You're buying assets, incur living expenses, so your needs, right? You have to make sure you pay your bills on time, utilities, um, your gas for your car, maintenance, um, uh, groceries. So all those living expenses, you could put them on a credit card, right? And you could get into debt because you're utilizing it. But then you pay it back. You could get into debt when you have an unexpected expense. If you don't have that emergency fund that we talked about on our previous webinar, you're gonna go that second route, meaning I'm gonna apply for credit and see if I qualify so that I can pay for these unexpected expenses. That could come, pretty um, pretty high, right? So, and that would help you by having that good credit score. Getting into debt will help you pay off whatever the emergency was or the unexpected expenses. But then you need to you borrowed money, now you got to pay it back. Um, and then buy something that you want or need. In the essence of you could buy it now and then pay it later. That's what that means. Okay, let's move on to this slide. What can happen if you don't pay back? So this is where we can get into trouble. So when we use credit, we need to make sure that we are on top of our balances, because we don't want to pay, late fees. We don't want to incur interest. That's another thing. When you have credit, um, based on your credit score and based on the promotion that the credit card has, you need to look at that. And we'll talk about that a little bit later. But when you're purchasing or when you're borrowing a credit card or borrowing a loan, know how much interest comes with it, because you're you have the loan amount, but as you use it, it's going to incur interest, and that you're going to have to pay that interest. There's different ways to avoid interest payment, but that can happen, right? So we have here, you don't want to pay late fees or more interest. Um, we don't want to have a bad credit history in our in our well yeah in our own history, right? We don't want to have that bad history that we don't pay our bills on time, that we have high balances, there's just sitting incurring interest. That makes our credit scores drop. So if we're not deciding to make even the minimum payment, it's hurting us. Okay, so we want to make sure we keep on top of that. We may lose service if we don't pay the cost. um, Wage and garnishments. So if you have like a large amount that you are that you owe, then they can start taking from your wages, to make those payments, so that we can get back into that even balance or zero balance, and you're good to go to another credit. And then losing collateral is another thing. Collateral is something that supports with you even getting credit. So it's very important that you, again, keep track of your balances and make your payments on time. You see this, you have the high cost debt first, which is the method, and then the snowball method. So which one would you like, right? It's all dependent on you. Oh, let me go to the next slide. So on this section 1, we're going to be covering credit reports. So what is in the credit report? On a credit report, you will see your personal information, which is your name, your date of birth, might have your address, that's for your social in some cases. But it also has your history of all the credit accounts that you've had. And it also includes late payments. If you had, it keeps track. It keeps track. So that's why we want to, we emphasize, keep track of your balances. I like to say, treat the credit or a credit account like you would treat your own personal finances, your own personal checking account. If you're on top of those balances, to not go overdrawn and pay extra fees. Same thing with credit. You want to keep on the top of your balances. How much do I owe? Let's pay it back. The sooner the better, to help me save interest, to help me save late payments. And you will have a clean history record if you do that. You will see credit accounts and account limits. How much are those balances? If you had accounts assigned or they were sold. Derogatory information, if you had any charge-offs, if you have filed for bankruptcy. If you're a student, you will see a history of your loan payments there. Public record information, and also your application for new credit if you had any inquiries. This is key on your credit report or credit scores. If you go to different places and apply for credit, it's not good if you do it all the time. It starts hurting your credit. So be very careful with that. You want to be selective where you're going to apply for credit, because again, those inquiries count and they stay on your record, and it can hurt your credit report. Your credit score, I mean, but they'll be on your credit report. Also, another reason why you need to know what's listed on the credit report is if you see any discrepancies, you want to report them right away. You don't want something on your credit report that's not you, right? Because that's a representative of you. This on paper, this is your history, your how do you keep track of your finances, right? This is just like a paper description of your character, right? When it comes to credit. So there are 3 different nationwide credit report agencies where you can request your credit report. We have Equifax, Experian, and TransUnion. I like to ask the participants to take a screenshot of this actual slide, because it has their link there, right? Their website where you can, go in there and see the information, or go directly. This is the correct, how can I say, the legitimate website, because there's a lot of imposters out there that can, utilize the name, right? And try to make these fake websites and to get your personal information. So that's why I like to say, please take a screenshot of this screen, because it has 1, the logo, and then 2, it has their websites that are legitimate.
That's a good point, Carolina. Just really quick, I'm going in and out. I'm not going to be on a call for the entire webinar, but thank you very much. Good information. Can everyone see the screen? Because I'm looking on this slide. I don't see the link. I just see I barely see one of them, so I wasn't sure. Just to make sure everybody can see it. So there you go.
Let me make it bigger. How about that? Let me see.
Good.
Okay.
Excellent. Thank you.
And then share. Okay. Are you able to see it bigger?
Yes, much better. Appreciate it. Good to
You're
know.
welcome. Thank you for bringing that up. Okay. So yes, so I would like to take really recommend it, because again, there's a lot of imposters out there that want your personal information, especially if you had good credit, right? Because then they're gonna want to use your credit. So very important to know their logos and their legitimate websites. Here on the screen, you see an example of a credit report. So very basic, but again, it has all the information. It will have the report number, personal information, your employers listed. And in this case, it has your potentially negative items. You see, it categorizes everything for you. Accounts that are in good standing, and then any new request, and what's your credit limits. It has all that. Okay. Who uses your credit reports and credit scores? So financial institutions, we can use it when you apply for a home loan, for example, or a personal loan. Landlords, they can use it for when you want to, rent their apartment. They want to make sure that you have a good credit score because again, that's your character, right? Like, are you going to be responsible to pay the rent on time? Utility companies may run your credit for the same reason as a landlord would, right? Are you responsible to pay these bills on time? Cell phone companies, same thing with the insurance companies. In some states, employers, the employer is okay. Same thing, responsibility, right? Not necessarily looking at your score. It's just, are you responsible? Um, State agencies or any other affiliated organizations might run your credit scores. What you should know though, if your credit report or credit scores are being utilized, by law, anybody who's using these credit reports or scores, they have to let you know. So just note that when your credit report is being used, they notify you, they provide you a disclosure with this is the reason why we're running your score, or you authorize them. They might have a waiver. Okay, if you want us to go ahead and run this, let's go ahead and sign an application. So it all depends on what institution you're going to or what agency is utilizing these credit reports. By law, they're required to let you know. Okay, let's move on to risk-based pricing. So the risk-based pricing is pretty much the interest rate that you will get in your loan or credit card. What they use this score to see again that risk, right? Are you likely to pay the balance that we're lending you back or not? It's pretty much doing that debrief, looking at your credit history. How many balances do you have? How much do you make? They compare everything, right? So yes, and then this one also tells them if they're gonna maybe adjust your rate. So depending on your score, they might give you, if you have perfect actually or very good credit score, they can give you a better interest rate. Whereas when you don't have too much, it might be the default interest rate. So this is it's just an estimate of how much risk is it going to be within the loan. Okay. So having no credit report or score means your credit invisible, meaning there's nothing to look at, right? Like I remember again going back to my first experience, my car. When I went there, I was like, what? No credit. I have a job. I have balances. Isn't that what matters? That I know I'm gonna be able to pay it, right? So credit invisible means you have nothing for them to look at. There's definitely nothing. There's nothing on paper that explains that you are responsible, that you are able to pay these balances because of the income you make. So having no credit, it can affect you by again getting a higher interest rate or getting you have to be paying a large down payment to be able to get that credit. So yes, difficulty in obtaining the credit loan, maybe difficulty in not even being able to rent your apartment or getting your home. Um, Getting a favorable cell phone plan. Again, there's different plans. Well, if you don't have good credit, they might just offer you what's the most basic, right? Which has like higher fees. Um, Obtaining some jobs, definitely, because again, if that's something that's huge to the employer, they want to make sure that you are responsible, and that could be a big factor. I don't know. But yes, obtaining some jobs could be something that affects. And then turning on utilities with low deposit fees. So yes, when we want to, have our utilities, when we have the activation fees, if you have no credit, again, they're going to pay the highest fee. Whereas if you have good credit, again, they could see, okay, this good credit, that's the perk for having the credit score. You have options to opting out and receiving pre-screen offers. So once you turn 18, it's like you receive a lot of offers. You receive them by mail, and you get them from different companies, different banks. It's free pre-screen, right? They kind of do like maybe like a soft hit soft hit on the credit, but it isn't affected because again it's a pre-screen, and they just send you, oh, here you're pre-qualified for this amount of money with this company or with this bank. You have 30 days to reply to get that credit, right? So if you would like to opt out of receiving pre-screen offers, you could definitely go to www.optoutprescreen.com or call their toll-free number 888-5-OPT-OUT, and you can select to not receive these. Now there's a way to, if you want to receive the offers back, then you can just go visit their website or call them again and say, hey, let's go ahead and I'm going to be opting in now. I can do that. You can just make the selection, right, to get those offers. But there's definitely, you have that opportunity where if you don't want to receive them, to, save the clutter, or you just don't want to know if you're qualified for them. You just want to apply for the ones that you're interested yourself. Totally fine. You can do it by doing this, going to their website and doing the selection or calling them. It says here on the bottom, you cannot opt out of having a credit report. A credit report has to be made no matter what. That's what you cannot say, okay, well, I don't want my credit to be seen. There's no way you can do that. You have to have a credit report. All right. So here on the screen, you have a scenario of Yareli that learns the importance of having a credit history. So they're saying, do credit reports matter? Yes. As we've discussed earlier in the previous slides, credit history really does matter when you want to purchase something big like a house, a car, or obtaining a personal loan to go on a trip, or pay for your kids' tuition. If you get yourself on debt for that reason, there's many different why, right? So, but in this scenario, she's learning the importance of why we should have a good credit history, and everything that comes with it. So I'm gonna go ahead and send, I guess I'll send it to Dexter, or Vernell, I can send it to you, the job aid that you can read the scenario. It has questions, and we can go ahead and do it on your own time. But very interesting how she didn't know about credit history, right? She was convinced that she didn't need it, but you do need it. All right, we're going to move to section 2, which discuss credit scores. So the basis of credit scoring. So credit scoring is a number that's calculated based on all your reports, all the balances that you owe from different lenders, different credit cards. It just calculates everything, right? Like I mentioned earlier, you want to be in the 30% mark of the loan amount or credit amount, just so that they can see that you're able to pay off your loan or the credit that you were qualified for. So that's what I mean by that second bullet point. It predicts the likelihood of payment, the history. So it says there, generally the higher number equals lower credit risk. So that means you're using your credit responsibly. And then there's 2 significant factors that affect the credit score. So one of them is if you're repaying back your debts on time, no late fees, or if you're utilizing your credit rate. So depending, there's 2, but all this correlates to building that credit score. How do you use your credit? How much are you using? And they go from there. Here's more on the credit scoring. There are multiple producers of credit scores, so you're more than likely to have multiple credit scores. So there's one that's called FICO score, Fair Isaac Corporation. You can visit their website, www.fico.com, or you can use Vantage Score solution. on their website is www.vantagescore.com, or any other one that you trust, right? You see, I believe, let me see, I had it on my notes. We have another one that I just learned about, actually. I'm used to the FICO and Vantage, and I stick to those because those are the ones I know. But I just learned about another one, another pretty good one. So let me get that for you. Let's see. It was chime.com. If you heard of Chime, you can go to www.chime.com, CHIME. And that's another one that's really good, that can give you your credit score. And it tells you like how they calculate and everything. You'll be able to see that. All right, so here's the FICO score module. So you can see the weight of how they build the score. So if you see this pie chart right here, you have 10% of new credit. They have 10% of credit mix, 15% of length of credit history. And if you can see the two major ones in the bottom and then towards the right, amount owed 30% and payment history 35%. That has the biggest weight of what your score would be. So again, like I mentioned, keeping track of the balances and paying your payment on time, more than likely your credit score is going to be good. But again, they do look at the other factors, but the weight of the score, that's where you want to focus, right? The amounts owed and your payment history. Here on this screen is the FICO score ranges. So I like to also ask our audience to take a picture of this one because it has the scores and the information of where you want to be. So exceptional is applicants with scores that have the top, right? The best. They get the best rates, the best of the best. Their score is between 800 and 850 because this tells the lenders they're good. They're going to pay. They probably even save on their interest because they know that they have opportunity to not even pay interest because they're paying on time and keeping track of all their balances. Very good. These are also likely to receive better interest rates from lenders because they have a good score. So between 740 and 799. You're when you're in the yellow, it's a good credit score, and it says there it's only 8% of applicants at this score become seriously delinquent in the future. So it's like maybe you're gonna pay, maybe not. You're in the 670 and 739, right? That's a good score, but there's still like a questionable. So if you were to apply for a loan, there'll be little questions here and there of why, there's should we lend, should we not? Is there a high risk? Is it a low risk? So they'll be questioning. And then if you look at the bottom ones, we really don't want to be under the fair or very poor. But again, there's ways to build credit if we are at that point right now, by again going to the banks and asking for maybe a secured credit card to start. That's like the easiest way because you're using your own set of money, right? And then you're just building credit. Once you build the credit, then you will get an offer, and then that account you'll get your deposit back, and now you're using actual credit. So so fair means applicant scores range considers subprime borrowers, and then very poor credit applicants may be required to pay fees, deposit, and they probably won't even qualify for the credit. Okay, I hope you took a picture of that. I can go to this one too if you want to take a picture of that. It's also good to have, again, focus, amounts owed, payment history. Not forgetting the other three, but top two, that's what we want to focus on. All right, so let's move forward. On this one here, we have another scenario, and he learns about the credit scores. So he wants to buy a new truck, and he didn't know about credit scores. Like, well, he didn't know whether um, that would benefit him. So kind of like my story, that I didn't even know about credit, and I just wanted to buy this new car, and now he is in shock, right? Like, what? I didn't know we have to have good credit to have the best, terms and conditions, or the best interest rate. So this is what he talks about in the scenario. And again, we will forward the activity toolkit that has questions that you could answer at your own time. But again, if you had some similar scenarios, just think about it. Like, wow, if I knew, right? If only I knew. That's why financial literacy is so important. Um, yeah. So this one, he gets to know about credit scores and the importance. All right. So now, how do we get our credit scores? So you can go to your local nonprofit organization. They might not have fees, depending, but you can. There's locations that do offer that service, so just ask. You can also get them through the credit cards, some credit card statements, or the website. They might have them there. Like, if you have a credit card and you utilize it, they might already have like that connection with FICO or Vantage, and they work together, so like that you can see it visible. Um, and then also, let's say if you get turned down for credit, you have the right to receive your scores and also your credit report from the three major agencies. So we have them again here: Equifax, Experian, and TransUnion. So you have the right to receive your credit report for every 12 months, one. So you get one free credit report every 12 months, and you could get it from each of them, from each Equifax, Experian, or TransUnion. From each of these agencies, you could get one credit report for free. Okay. You can also go to the official website so that you can order the reports, and this is your annual credit report. So if you want to take a screenshot of this, I would recommend it. Again, that's the legitimate website to go to annualcreditreport.com, and then it has the three major credit agencies listed there. Reiterating, watch out for imposters, because they want your identity and they want your credit, right? Especially if you have good credit. You just want to make sure that the websites you visit, or wherever you're sharing your information, make sure that it's a trusted lender, so that you're 100% sure that your identity is not going to get stolen. So there's what other advertise: free credit reports, credit scores, and credit monitoring. So these are companies, or ghost companies, right? That say, oh yeah, these are third parties. Like, they say, I work with so and so, and I can go ahead and get you those reports. All I need is X, Y, and Z. So definitely, we just, again, I want to direct you to the correct website. We put it in there again, so that we know exactly what website we go to, because other websites that imposters build, they look legitimate. They can get the logos, however they might not be. So just be very wary about the screen that you're in, right? Make sure, maybe your computer, hopefully they have the protection, right, for what is it called, for any viruses, because that's a way that they can steal your identity. You press on a link, and there you go, you have a virus, and then it's just looking for your information. So there's often services that say, okay, it's free, you could do it now and then pay later, but no, just, again, go directly to the annualcreditreport.com, to this website that's on your screen, and you should be fine. On this one here, getting a credit report. So this one gives you the steps. You could go to online, right? It tells you there on your activity toolkit, you'll have steps 1, 2, and 3, and then it will list the Equifax, the 3 major credit agencies, and then what is required to fill in there. And again, it says to make sure that you are on a secured internet connection and try not to use your public wireless internet. Again, because you never know who's going into that same screen that you're going into. Make sure you either print your report or save it. Maybe don't send it by email because again, we want to make sure, especially if you're using a public computer, you want to make sure that you use your personal devices. On this screen here, it's another scenario. So Ray reviews his credit reports because he wants to buy a house, and he has set some money aside for the down payment. So it looks here like in this scenario, he attends the home buyer education. So he knew the importance of the credit scores and the credit report. But it says there that he never ordered a credit report. So this is something new to him, right? So he learns about the reports themselves. So what to look for and why is it important to know what's on the credit report? So we can read that scenario and then answer a few questions based on the scenario on the activity toolkit. Which leads us to section 3 that says disputing, building, repairing, and maintaining a productive credit report. So this is important, right? Like I mentioned earlier, we need to find everything that belongs to us. If we see something that doesn't belong to us, we gotta report it. Common errors on credit reports is sometimes the identity errors. So is our name spelled correctly? That could be a huge, change. Like there's a lot of people that have the same name, but they're spelled differently or slightly different. So that's something that you want to make sure that your name is spelled correctly. Again, the numbers that belong to you, your social security number, your address, all of that information. Incorrect reporting of account status. So let's say, for example, you closed out this credit card 2 years ago. You already paid off the balances and you just wanted to be done with it, right? You closed it out, you have confirmation you closed it out. But on your credit report, it shows that the account is still active and it has a revolving balance. It's still there. Like you have a balance and you owe it. So we got to report it. No, I closed it out this long time ago, like 2 to 3 years ago. And why is it showing active when I know it's closed? So report it right away. Data management errors, balance errors, or any other outdated information that doesn't belong there. So balance errors is a huge one too, right? We want to make sure that our balances are like the balance that we know that we owe, not a balance that maybe I had some fraud on my credit. I don't know. You got to look at that. So know that there is time limits to reporting negative information. So here it talks about late payments. So when you have late payments in your credit history, it can stay in your report for 7 years. So that's why it's important to try not to be late on your payments when you're dealing with credit, because you don't want to have that negative information on your report. It doesn't look good, and then your credit score drops, and again you're getting the worst deal pretty much. You won't get the elite interest, right, that you want for, or that the how can I say, the oh my gosh, I got lost track here. The promotional rate, right? Because if you don't have a good credit, you might not get the promotional rate, which is usually a 0% introductory for a good amount of time, either 6 months or a year. So just know that if you have late payments, it stays for 7 years. If you file for bankruptcy, depending on the chapter filing, it can stay up to 7 to 10 years. So if you see there, if you file for bankruptcy, and then foreclosure, it generally stays also for 7 years. So here, there's no time limits on negative information. If you have a job with a salary of $75,000 or more than $150,000 worth of credit, or life insurance with a face value of $150,000 or more. Medical debt and credit reports. So on this one, it says there generally there is about 180 days, right, that they give you so that you would pay off your balances. So the reason why they give you so many days is, to resolve. It gives you time to resolve your billing disputes, to make your payments or your payment arrangements. So it won't stay in your record for a long time that you were late or whatnot, but they have a little bit more, I guess, consideration when it comes to medical debt. It gives you a little bit more days to pay off those balances because, I mean, again, it's a hard time, right? When you have a large medical bill for, a health reason. So that's what that is. Gives you a little bit more days before it's reported as past due. So 180 days. After it passed that limit, then it'll be reported to the credit agency as past due and late. Okay, how do you dispute an error on your credit report? Option 1, you can go to online, 3 major credit agencies. The websites are right here again. You have option 2, you can mail them to the 3 major credit agencies. And then what should be included in your disputes? You want to make sure you have your complete name and address, a clear description of each particular item that you're disputing, and then the reason of why you're disputing it. You want to be very detailed. And then you want to make sure that you request the correction of either the balances or the removal of the entire thing because it doesn't belong to you. So you want to make everything very clear in that letter, so that it can be corrected if it doesn't belong to you. So what happens after you file a dispute? The credit reporting agency will send you a letter letting you know that they received it. The incorrect information cannot be put back, so you need to again keep track, checking your credit report to make sure that it didn't come back, because it shouldn't, right? You sent the dispute to correct it and to delete it if it doesn't belong to you. Or the incorrect information, if it was a balance and you did make those payments, they need to fix that balance. You need to make sure that it reflects that it was paid. And then you can request notices of corrections to be sent to the individuals that's maybe asking you for your credit history, or the businesses that that receive the credit information. There's ways to repair, improve, and build credit. So how do we do that? We review our credit reports annually. Very important to, again, they're free, right? We get them for free. Let's leverage that from the 3 credit agencies. Get it, review it, make sure that what we have on paper is what we committed and what we have to, what belongs to us. That's what I'm trying to say. Dispute any errors, pay your bills on time as agreed. Try not to miss any payments. I know sometimes it could get hard, or we miss it. We lost track of time. It happens, but let's try not to miss so many. Shop for the right credit card. So when you are shopping for credit cards, or the loan, right, you want to make sure it's the right loan and credit card, and the limits too that fits you, like your needs. That that this is how much I can manage, and this is how much I'm able to pay, and I can manage responsibly. Use as little of your credit limit as possible. Again, bringing up that 30% balance, um, keeping that in mind. Negotiate different terms. So there's like if you have a outstanding balance and you happen to miss a few already payments, you're late, you can talk to your lender. Can we negotiate what maybe my minimum payment? Can we make it a little bit lower for a few months and then we build back up and start paying it off, right? You can negotiate. Um, you build a financial safety net. Keep a good financial record, just like you would, right? Like I said, treat credit like you would treat your own personal finances. Keep those records. Know what's going on. Keep old accounts open if you can. This is a good one. It's always asked, like, why, if I don't use the credit, why should I keep it open? So I'll give you an example. There was one time that we went on a family trip, and I had closed out my credit card, and so we went to a family trip out in Vegas or somewhere, and we needed to pay for the hotel, right? So my husband doesn't have any credit, so he was the one making the room reservation or whatnot, and they asked him for a credit card. And I'm like, oh no, I closed out my credit card. So we had to look for another place that didn't require that. They didn't require to have a credit card because we had our debit cards, right? We had the debit cards, we had the cash, but they required a credit card. So it's good to have something that's open, even though you're not incurring any fees, especially if you have a credit card that doesn't have an annual fee, right? If you shop around and you look for that credit card that's gonna benefit you, like, okay, well, if I have the balance, I know how much I would, get charged if I spend because I know the interest. But at a yearly rate, if it's still open and I don't have a balance, I'm not gonna get charged. It's good to have it open just in case, because then you have, you have the capability of like, oh, here's a credit card. You can put it as a collateral or as reference, right? So just thought I shared that a little story with you. In regards to keeping a credit account open, it could come in handy. And if you don't, it's like, oh, I coulda, shoulda, woulda, but didn't, right? All right, so let's move on. Building alternative credit history. So document other payments you regularly make, such as rent payments, utility payments, cell phone bills, savings. That's the secured credit card account that I was talking about. It's usually set in the savings account. And then a loan from a friend or family member. So somebody that's co-signing with you or lending you that history. So these are ways of alternatively, build that credit history. How to get help in regards to learning about credit? Go to your financial institution. There's bankers that are ready to answer your questions in regards to the credit, in regards to what products and services they offer. Nonprofit organizations that offer credit counseling and financial education. Housing counseling agencies approved by the Department of Housing and Urban Development. And then we have the certified financial planners. And then amongst other, there's different ways that this webinar is very, very informative, right? There's like, we try to emphasize credit. It's good to have. We want to make sure we manage it correctly. So attending webinars such as this one, just to hear, the information, and maybe hear from others when we'll open it up from questions, maybe best practices. It's good help. And then beware. So beware of credit repair companies. So this is a good one. Again, um, protecting ourselves from the imposters, right? So these repair companies, they promise to fix your bad credit, but then they don't. So all they did was take your information. So you got to be very careful of yeah, I promise, we'll go ahead and do it. Promise fast and easy credit repair. Like it sounds too easy, right? Like, okay, you promise it. It sounds very easy. Big question mark. Like, am I sure? Do I really want to give my information to these imposters? Offer to create a new identity for you. Wow. That one, if they offer you that, you know, definitely it's a big red flag. Do not give your personal information. They want to pay you up front. That's a big question mark too. Promise to fix your credit for free for a fee. So they charge you and they say they're gonna fix your credit, and then they will tell you about your rights. So they also they try to sugarcoat, you know, uh, what what they need, or how they would do the credit repair or whatnot. It just sounds too easy. So just beware of the imposters that are trying to get your personal information. Okay, so now this takes us to remembering our key takeaways. On section 1, we talked about credit reports, and how this can, how can you affect your access to credit, loans, job, housing, insurance, and other important services. So understanding the rights, um, that that help you, it's you know that your credit history is important. So having those reports and reviewing it, you you'll do a good job. You'll be on top of your balances and everything, which helps, going on section number 2, your credit scores, by keeping on track of your credit reports. This helps you improve, right, and manage your credit scores. It also includes like how you paying your bills on time, and by doing so, you building up that credit history. Section 3 is understanding your credit reports and scores. So know that you can get at least once every year your report for free from the 3 credit agencies, and understanding what's on the report and reviewing it, and know what to look for. That's good, and you're on top of your game there. Number 4, disputing errors and your credit on your credit reports. So yes, if you find an error, make sure you dispute it right away. And that brings us to keeping track, right? Keep tracks of your credit history, so like that what belongs to you and what doesn't. If it doesn't look right, report it right away, and know that you will receive some notice whether it was fixed, repaired, and then it should be um, appearing on your credit report accurately, and not something that doesn't belong to you. And that's it. That takes us to our last slide. So thank you so much for being with me this evening, talking about credit. So I'm open to any questions you may have, or maybe if you want to share something that pertains to credit, you want to share with the rest of the participants, please feel free to either write it on the chat. I'm going to stop sharing so that I can go ahead and view the chat. But yeah, I'm here. I'm here to answer any questions you may have. Thank you. Thank you so much for being with me today. I hope I didn't lose you, right? Wait, I didn't lose connection. Thank God. Yay. Okay, so let's see. I see in the chat. Thank you so much for the information.
Hi, Carolina. This is Linda.
Hello, Linda. Hi, how are you? Thank you so much for joining us today.
I'm good. I just wanted to know if you knew why the 3 different private credit report companies' scores vary with the same information.
So that's a question that always gets asked, and there's no clear answer to that. But what I do know is that these credit agencies, they tend to look at the 5 factors that we showed earlier. So they have a different way. So that's possibly the reason why they vary a little bit and slightly, not so much, but it's probably the way that they weigh the scoring. I hope that answered your question, Linda.
Thank you. Yes.
All right,
Okay.
Carolina.
Yes. Hi, Richard.
Okay.
Thank you for
Hi.
joining us.
Hi. Two things. In reference to Linda's question, you're right. It's the way different agencies weigh things differently. And also be mindful, everything is not being reported to each agency. So, for example, Equifax might not have everything that TransUnion is getting. So every creditor is not necessarily reporting everything to each credit bureau. But the one thing I also wanted you to deal with, I think this was last month, it's regarding medical debt. I think medical debt now is coming, it's not going to be impacting credit scores. I think it was in the news last month. I was trying to pull something up. Did you hear about that?
No, I hadn't heard about that. But thank you for sharing, Richard. I mean, I know that it gives them a long time before it's reported as late, but I hadn't heard about them taking it away.
Yeah, it states that
What's
it
it
might
doing?
be. Yeah, it looks like, yeah, I'm reading something here about most medical debt is coming off credit reports.
That's
And
awesome.
here's what to do. This is a report by CNBC. I thought I had heard it in the news. Also, one other thing in terms of aging, things aging off. Now,
Yeah.
one scenario, I used to be in the mortgage industry. I wanted to share this with people, myself also. You know how you have old debt sometimes hanging around, and you get these letters in the mail that, hey, if you pay this, or if you do this, you were going to cut your bill, or you can start paying monthly at a reduced price. Now, you have to be very careful with that you're going to pay it off, because what will happen is if you're close to that 7 years or that 3 years, time starts again. The clock starts again once you say yes. So like a lot of experts will say, if you have old debt, just let it go and it'll be eventually wiped. It's going to be aged out rather than trying to, because sometimes those letters are tempting, and, you know, debt collectors say we're going to sue, which most of the times they're not. It's just an idle threat. But sometimes if you want to pay your debts because you want your credit score to be right. But if you run into that situation, hey, just let it go. Don't try to make a payment, half a payment, because once you do that, the clock starts all over again.
Ticking. Oh, wow. Good to know. Thank you so much, Richard, for sharing that information. So valuable.
Okay.
Awesome. I saw somebody else's hand up. And then we'll go with your question, Maria Isabel.
Yeah.
Thailand, you have your hand up, and then I'll go to you. Okay, Maria?
I'll wait for everybody else's answers because I have a couple things to clarify on some questions and provide some exact information.
Okay, thank you. So Maria Isabel had a question. She says, what are the steps to take in case of fraud? So going back to reviewing your credit report history is looking for the errors, right? So if you see those errors and you know it's fraud, you need to contact the credit agency so that they can fix it. Now, if it's the credit card, you also want to contact the credit card company and let them know this is not you utilizing the that credit balance. So if it appears on your credit report and it doesn't belong to you, you got to clear it. If it's fraud in the actual account, you have to report it to the credit company.
Yeah, some years ago with Bank of America, somebody actually changed the address and changed everything and applied for a new account, and they were using it. And but the bank noticed it and let me know. We're asking questions whether it was me. But thereafter, I had issues, because of that. And so I was told that I needed to close the account, that I needed to send in a freeze on my credit reports. And
Right.
so what are the actual steps that one should take if, to know just in case?
Well, the first step to take is to report it. That's your first step. Like if you notice something that's not you on the account balance, the first step is to contact that credit agency and
Oh no,
report it.
the bank's the one that noticed it, because this was within days that they were using a new credit card because they had reported it lost or something. So they were pretending to be us. But the bank is the one that noticed it. I wouldn't have not been able to notice it.
So once the bank notifies you, then they start the process, right? Because they're confirming and they're asking you questions. Was this you? If not, let's go ahead and start fixing it. So if they're the ones that caught it and they're verifying it with you, that's already that's the first step. And once that continues, there's like a dispute process, right? If there was balances taken out, you keep up with it, keep up with the dispute and until it's finalized, until it's done.
Yeah, but I had to do several steps with the credit reporting agencies, and so that's what I'm talking about. What steps are supposed to be taken to make sure that that it isn't easy for whoever has your account information, because apparently they were able to get information to do what they did. So somebody already had my information.
So that's identity theft, right?
Yeah.
So you have to report identity theft.
Okay.
All right. Thank you, Maria. Thailand?
Yeah, so I'm going to try to recap on a couple of things that were being asked and elaborate on some things.
Okay.
To Maria, the steps to take for identity theft, first is to contact the police and notify them that you had your identity theft. If you want anything done when you are disputing to the credit bureaus, that is the process. There's kind of a misunderstanding that the credit bureaus do everything. They just report data. Most likely everything is going to go through the furnisher, which would be Bank of America, whoever is the lender, wherever you got the money from. The credit bureau is just reporting the data that is sent to them. When you dispute with them, they're going to go literally right to the lender and get that information. So you're better off going right to the lender. After you do get your identity theft report, the lender, which would have been Bank of America, if they know that this was identity theft or fraud, they should have properly guided you, giving you a dispute form and also sending that information to the credit bureaus. And honestly, you shouldn't have had to worry about it because they would have provided significant enough information. But I do have to say that sometimes, right, if you don't get that information and you don't know, then it's kind of like you're in limbo or something like that. What else? Yeah, so usually if you have identity theft, you go to the police report, you document that. When you go back to the lender, they're going to give you a dispute form, or they're going to notify the credit bureaus you want to do a dispute process, or you send them the identity theft form that you had from the police office, which they'll give you a copy of, which you need. You can also go to the CFPB, the Consumer Finance Protection Bureau, which is for consumers, and also file an identity theft report through them. That's actually probably you would go through them before you go to the police. Those two steps don't matter, but they are very significant. Once again, the credit bureaus just report data. The CFPB are the ones that regulate the credit bureaus to make sure that they're reporting data. So if you give them information on fraud, they're going to make sure that the credit bureau gets that information and reports it on your credit report accurately. Talking about medical debts, very big misconception. Paid medical debts will be deleted off credit reports, not just any medical debt. So if you had a medical debt and it was paid and it was still reporting on there, regardless whether 7 years have passed or not, then that information will fall off. Also, if the medical debt is less than $500, I believe, it will not report on to your file. If it's over $500, then yes. It's kind of like the student loan thing. A lot of people think their student loan is going to get forgiven. There are very, I don't want to say strict, there are guidelines and circumstances to those. So for example, for student loans, Navient, if you had Navient in like 2010 to 2015, those were the people getting forgiven. You got to really kind of do your research and read these articles to figure out those small data points, because then people are just going to wait and not pay. And then what's going to happen when Biden doesn't forgive student loans? You're going to have a whole bit of interest and money to pay back, and your dream just kind of crumbled. Talking about why there are different FICO scores. So most lenders use the FICO score, which is, she said, created by the ISIC Corporation. There are 28 different type of FICO scoring models. You have one for applying for a credit card. You have one for a bank. You have one for auto. You have one for insurance. Mortgage has about 3 to 4 or 5 different type of FICO scoring models, FICO 4, 3, 5. It's important to know when you're applying for whatever it is, what FICO scoring model that they're using and what lender they're pulling from. So for example, Chase usually only pulls TransUnion. Navy Fed business credit cards only pull Experian. Bank of America usually pulls TransUnion. Car dealerships usually pull Equifax. That means that you're not getting an inquiry on all 3, but only one. And that gets a little bit deeper as well. For example, Amex only pulls Experian. If you have a good Amex score, you can get up to 14 cards based off that one inquiry, because they don't do a hard pull every time you apply for a new card. What else is there? What other question that was asked? Oh, going back to the Vantage score was created by the 3 credit bureaus as an alternate version to FICO score. It grades a little bit easier. So for FICO, you have to have about maybe, I believe, 6 months worth of credit history to generate a FICO score. For Vantage, it's about 3. So whatever history or whatever the reporting standards are for you to generate for FICO, usually for Vantage score, it's cut in half just for you to generate a score. There's kind of, it's good to know both. A lot of people usually know their Vantage score. So for me personally, I teach about the Vantage score and don't teach about the FICO if I'm repairing someone's credit. One, because there's no point to really talk about it. I don't want you applying for anything while you're getting your credit fixed, which usually people do, and then they end up damaging your credit more in the process of credit repair, which has many stigmatisms against credit repair companies and other things like that, but I won't get into that. But yeah, you want to, I teach FICO after their credit is fixed, because if your Vantage score is good and your Vantage score is cleaned up, your FICO score is going to be even better. And going back to what I believe Richard said, not every company reports to every credit bureaus. So you may have a credit card that only reports to TransUnion and Experian, and it doesn't report to Equifax. So your score is not going to be the same because they're not weighing that credit file on there. I think that's it right now for some of the things that were asked. If I missed anything, please ask.
Can you confirm Consumer Protection Bureau? Is that what you said?
The CFPB? Yes.
CFPB?
Yes.
Consumer Fraud Protection Bureau?
Consumer Finance Protection Bureau, I believe, is what it's called.
Yes.
Okay.
Hey, Tyler?
Yes.
Hey, this is Richard. How you doing?
How you doing, Richard?
Good. I'm glad you corrected me on that, because I was just, because I know I had heard something. You're absolutely right. All medical debt that have been paid and is still on the credit report, you're absolutely correct. So, you know, when you get older like me, medical debt is big. But let me mention this. Also, it states here that, I'm not sure if you mentioned that, because I was so interested in your initial answer, that the 6 months, even if it's unpaid debt, they're not going to report for an entire year. Rather than 6 months.
I did miss that. Yes, I did miss that. Thank you.
Oh, okay. So that's good news too. Gives, yeah.
That
Also,
is.
also, I do want to add again, going back to the identity theft. When you had, for example, I just had a client, a friend of mine, who actually lost his credit card, never reported it for whatever reason, end up getting charged off and some other things, right? Now he's in a bad situation. Also, kind of looping in, if you have a late payment, don't be afraid to contact the lenders, right? For whatever the situation is. It is better for you to contact and be lost than kind of shrug your shoulder and let it blow off in the wind, especially when it comes to credit. It can have very dire consequences for things that you want. Almost everything, your credit is a credit profile, actually. It's treated like your social. Also, that reminds me, going back to what she said about having your credit report pulled every year. So annual credit report, actually, since the CARES Act has been started, you can pull your credit report every week, actually, until 2022, I believe. But I do want to make a very personal comment. I would rather you get credit monitoring because it has way more benefits than you just pulling your report and looking at it. Also, it does not give you your score. It just gives you the information that's on your report.
Awesome. Thank you so much, Tylen. This is great information. Do we have any more comments? We're at 7:19 in the evening.
I want to ask, what's the difference between credit monitoring and how do you do credit monitoring without pulling your report or score?
So hopefully I answered this right. Pulling your score, I think I said this first. Okay, so no, when you have credit monitoring, that is, so for example, Experian has a credit monitoring service, TransUnion has a credit monitoring service, Equifax has a credit monitoring service. Now, she kind of touched on, so I kind of didn't want to get into this because I feel a little biased because I do credit repair. There are many other companies you can go get your credit report from. Before I touch on that, and this is very personal, most of our information is already out there in the world. So even if worst case scenario, somebody did take your information, if you had credit monitoring, you would see when they apply for something because you're going to get alerted when you get an inquiry. You're going to get alerted when somebody checks your credit. You're going to get alerted when a new account happens. You'll be able to take those identity theft measures way quicker and be notified. There are other companies, like I partner with a company called Smart Credit, which allows me to pull credit reports. There are many companies that you can pull your credit report from, usually for $1. They have a trial period and things like that. So I don't, hopefully, and I hope she didn't give this misconception that you only have to go to Experian, TransUnion, and Equifax. That's not the case. Usually most credit monitoring companies will have those logos underneath. So you can use that as a kind of verified source. For example, Smart Credit, when you go to their page and look at some of the documentation, it will say, we pull 3 bureau reports, which is Experian, TransUnion, and Equifax, which is why you don't want to use something like Credit Karma, simply because they are not a credit monitoring service, even though they give you your credit score. Benefits of credit monitoring service, $1 million identity theft protection, right? So once again, going back to if you are monitoring your credit and you see that somebody is stealing your identity, you are covered up to $1 million. Companies like the one I partner with, Smart Credit, will cover your whole entire family up to $1 million, even if you are the only member that has Smart Credit. Going to other benefits such as a money management system or a budgeting system, a credit monitoring service that allows you to connect your credit card accounts or any other type of accounts that you're paying on. So now you don't have to log into your bank to actually look at your payments and do things like that. Also another feature, and I'm speaking about Smart Credit because they have a lot more features than other credit monitoring services, not just because I partner with them. They allow you to dispute through them. So if you don't know how to dispute accurately, because there are certain words that you need to know, you shouldn't dispute online because that waives your rights to disputing. You need to send it through mail. They will actually send mail on your behalf to dispute accounts, whether they are late, reporting inaccurately, need to be updated, and etc. So that is the benefit of having credit monitoring. That is, I guess you would say, hopefully that answers your question, hopefully.
Thank you.
I'm on mute. Thank you so much again. This is awesome having you online, Tylen, the expert. Love it. Sharing all this information is very beneficial to all of us, right? I do have a question on that because I don't know if there's a like. Do you know if they have a fee for the monitoring?
Yeah, so credit monitoring does come with a fee. Usually it's about $20 to $30. Some do go up to 40.
It depends.
Yeah, so it depends on the price. Now, I want to say this. It's very beneficial to pay at least minimum $25 a month to protect your identity, which is most likely already floating out there somewhere in the world.
Absolutely.
So if you would like more information, I would there are only two credit monitoring services that I really talk about and promote. One is Smart Credit because I'm partnered with them. They provide a Vantage score. The other one is FICO. It's called the FICO app. They are the only app that provides all 28 FICO scores for you to see. They are $40 a month though. FICO scoring tends to cost a little bit more than Vantage scoring. So it's kind of personal which one you want to choose. Those are the two that I would highly recommend than any other credit monitoring service out there.
Awesome. So definitely, this is a good way to know that there's other resources out there, right? And knowing the right ones that we should be looking out for is perfect because we don't want to just go to any agency that's offering, you know, these services. We want to make sure they're legitimate. So
And also, sorry, I have so much to say. I wanted to go on. I forgot to say this in the beginning. We were talking about ways to build credit. You'll always hear me talk about non-traditional ways to build credit. So there are many ways, especially that I would advertise before you go get a credit card or a secure card. Use non-traditional ways of payment to report to the credit bureau, such as your rent or utilities or subscriptions. There are other companies such as Kickoff, for an example, where you can literally pay for PDF files like meditation or how to build a business for $2, and they will report a $500 trade line on your credit report to help you build credit for literally $2 a month. So a mortgage, credit card, and student loans are not the only way to build credit or to go about them in this day and age now. There are a lot of things that have changed that simply have not been updated. And I don't want to say taught, it's simply being updated by some financial institutions and things like that. There are some fintech companies that are working with financial institutions, credit unions, and banks to provide this information, which is very great. But unfortunately, it will probably be a very long time before a good amount of institutions know about these things. You might be muted.
Any other questions? Any other questions? Alrighty, I think Carolina's having some connection issues, and I think Vernell has stepped away for a minute. So I just want to say thank you all for joining this evening. Very good information. Thank you for pinch hitting there, Tylen. Tylen's a part of our wealth and financial team, so very good. So thank you all for joining. Hold on, I think Carolyn's coming back. Carolina, are you back?
Yes, I got
Okay, well you're echoing real bad, Carolina. No worries. All righty, so we're going to wrap it up, y'all. Thank you again for joining this evening. One more class next week for this series on Wednesday, May the 4th, same time, 6 o'clock. So tune in. Thank you again, and y'all have a pleasant evening. Have a good night. Thank you.
Night, thank you.